Hello, everybody. Joe Malone here on Dallas Trading Floor. Well, it's Friday, and the snow is melting here in Dallas, so I'm excited about that. I'm kind of excited about that. Pretty, tough day to trade. I didn't really buy anything. I only bought one thing today, and that was Matador. I've been trying to all day figure out a iron condor for I've been trying to figure out how to do an iron condor for Google because I think with the 20 for 1 split, it's going to be pretty awesome, but I haven't been able to figure it out. But I did buy a little bit of Matador. So without further ado, let's get into the slides. Thanks, everybody. Hopefully everybody's having a good Friday. So basically, this is the story, at least as far as I can tell. It looks as if, Jeff Bezos' company is kind of leading the market right now. It's amazing. It really, really pulled up everything. Just kind of wanted to show you that real quickly, the chart on it. And wow, we moved up, we moved down, and we moved up. So it definitely looks like we have some support. And I kind of want to I'll show you the technicals on this. The support for Amazon right now is at the is basically at the 50-day line, which is 28.24. And as you can see, we moved up very quickly, and then all the way to the pivot, and then we pulled down, and now we're moving back up. So actually, in many ways, this is forming a very, very nice motion here. I mean, it did overshoot a little bit yesterday, but it's coming back down. Relative strength of 89, and I have to say, Amazon is looking pretty darn good. I mean, it's got a 100% checklist. Now, can you buy it at this level? Well, this is a bit early. We are below that pivot, but this is possibly an early entry because we're trading above that very, very critical 50-day line. So, I'm going to try to look at over the weekend. I'm going to try to see, if we have anything that we can do here with, with Amazon. It seems as if, if you make your numbers and you're good, like Google and Amazon, things are great. And if not, it's not so much. Now, one thing, let's go to Amazon. AMZN. I had the wrong chart up here. AMZN. All right, so there we go. Okay, so there we go. Okay, so we did just break this reversal line here. We are cruising up to the 50-day line. Now, normally I don't like to buy a stock like this that's below the 200-day moving average. This is one of the reasons why this is really surprising to me in a lot of ways, this chart. But we're below the 200-day, we're below the 50-day, but it has turned up. We're the 21-day and the 10-day are up. So the thing about Amazon is it does look like it's moving higher now. And after hours, it's off a little bit, but we seem to have some very good support. We're not quite at the reversal. We're basically right at the reversal line. That's this line here that I've kind of highlighted here, and that's basically from the peak through the intermediate high down. So it looks as if finally we have, we may have turned the corner on this. Now, Amazon has been basing for quite a while. I'm going to go here. As you can see, we've really been kind of flat since September of 2020. It's amazing. So we've really been flat for quite a while. As you can see, we've really sort of been in this range. The high, let's go over here to the monthly chart. I mean, we're sort of off the all-time high. The all-time high for Amazon basically is about 37.36. So we're well off that high, but it's up this week. So it seems to be powering the market higher. It's interesting issue because it's been basing for a long time, and who knows what's gonna happen in the future. But it definitely has it definitely has moved the market. The market is in a confirmed uptrend. It's kind of amazing that is the case, considering everything, I'm not that fully invested right now. I'm really kind of taking a wait see attitude to see if we're going to get some better we're going to get some better results here. But right now we are in a confirmed uptrend. Just wanted to show you what my portfolio looks like. It's mostly cash, as you can see. The green is the cash. This is how I allocate it. Now, I did buy some Matador today. This is the only thing I bought, and the reason was because I wanted some exposure in this this area, the oil and gas area. It is doing the best, and Matador is one of the best out there. So that's kind of what I did on this. I bought it right as it crossed above into the buy zone. And let's look at the technicals on this. It's above everything. It does have an 89 checklist, which is excellent. It's above the 200-day, 50, 21, and 10. So we're definitely making the right, progress here. The U.S. E&P remains one of the strongest sectors in the market. It's number 3 out of 197 now. It just continues to be strong. So this is a tough market to trade in that it's very volatile, and we don't really have as many really good targets as I would like to buy. I mean, I'm trying to figure out a way that I can do a spread on Google, but that's about it. Just kind of showing you the chart for Matador. It's pretty strong. Now, also, we do have today. I just want to show you the volatility has come down a little bit. This is the VIX right here. This is the VIX. We've come down a little bit. We've come down to about 4.27% on the VIX. So we seem to be, we had this vol spike, and so maybe we're coming down a little bit. I hope so. That would be indeed a good thing. Basically, this is all I've got in my portfolio right now. I've got Williams Company. It's up today. Alphabet, of course, that's GOGL. I'm still in that. That's done okay. And then Matador, and that's it. I got stopped out of Matson lines today. I got stopped out, and I had a pretty tight stop, so it's not too much of a loss. But boy, I tell you, it is a tough market to trade. If you want to get our ready list, this is the most current one that we have. This is the address to get the ready list. So without further ado, let's get into some of the questions. Thanks for everybody holding on here. Hope you're having a good Saturday. Friday. My mind's elsewhere. My mind's elsewhere. My mind is elsewhere. So let's look. Let's look at MOS. I'm sorry, MOS. Let's look at MOS real quick and see what we've got there. MOS, and see if we've got anything that we can look at to kind of indicate where we're at. This is Mosaic. This is as you probably know, you've been definitely watching the Can Slim traders here, because Mosaic is a favorite of the Can Slim right now. I mean, it's chemicals and agriculture are 7 out of 197. So you're definitely in the right area. It's right above the buy point. This is a stock that is probably going to go up based on the price of natural gas. Believe it or not, natural gas is a major feedstock for agricultural chemicals. As a matter of fact, if it wasn't for natural gas and a company called BASF, we'd probably all be starving. Believe it or not, there's a process that creates nitrogen that allows all the farmers to grow lots and lots of food. And Mosaic is definitely doing well. This is really interesting because this is definitely an inflation play, but it is looking pretty decent. Let's go to the weekly chart on it just to take a look. And it is, it's right at this buy point, base on base. So believe it or not, this is a place that you could definitely get into the stock. It's outperforming most of the market. It's got an 89 checklist. So the only thing it's really failing on is the earnings per share, which is kind of strange when you think about it. But other than that, this is a good stock, and I think you could definitely buy it at this point. So this is definitely viable, as it stands. So interesting. You wouldn't think that a fertilizer company would be good, but that's not the case according to the charts. MOS is in the buy zone. right now. So, it is definitely, it's definitely viable, and you could definitely buy this one. Um, you could definitely buy this one right now. So MOS is looking very, very, very good. Yeah, I mean, I can't really say anything more. I don't own it, but you wouldn't be. It wouldn't be a bad one. It wouldn't be a bad one at all. Let's take a look at TTD. That's the trade desk, and I wonder if this is. And I should have looked in on this one because this one was a 10-for-1 split last year. This is in a very similar business to Google because they do sell advertising, and it does look like it is moving. And it looks like it's moving up to the 200-day line. It's been struggling as of late, but a lot of stocks have been struggling. It's one thing that is good is that the 50-day line is still above the 200-day. It's below the 200-day line. Here's what I would do. I would wait on this one. Let's take a look at the checklist on it. I think it's a pretty good checklist. Yeah, it is. But it's not a great. It's good enough to buy 67. But here's why I probably would not buy this one right now based on this chart. And the reason I wouldn't buy it, of course, is because it's below that 200-day moving average. So I would be careful on this one. This is definitely a watch list. You can definitely watch list this one. So my advice on this one is watch list for now. That's really going to be. That's probably going to be your best bet here would be to watch this one for now. So that's what I would do with the trade desk because I do think it's a good stock. It's just below that 200-day line. It's not one place you really want to buy below that 200-day line. You want it to go move above that and make a run for that. Let's see if we can get another question from TikTok here. Let's see if I'm. Oops. Go back there. Oops. Hopefully I can. It'll show me. Well, come on. There we go. So let's see if we can get a question from TikTok. Thank you very much for holding here. Amazon puts. Interesting. I don't know if I would be. I don't know if I would be shorting Amazon. So I'd be really careful with Amazon puts. But I do think it's going up. I think the better bet, and this is something that I'm going to be coming out with, is a iron condor. And the great thing about the iron condor is it allows you to be in a stock with protection on the upper end and the lower end. I was working on this iron condor. Let me see if I can pull it up. Let me see if I can pull up that. I don't know if I have a slide on this iron condor, but I will have an iron condor on this. So if you want to get on the list for the iron condor, we're going to be putting out some information, hopefully this weekend, maybe even shortly after this. But you need to get on the action trailer. It's super easy to do. Just go to www.Dallas Trading Floor to do that. Okay, so let's take a look at TTD. We look at TTD, MRO. And I think, it's moving very nicely. Of course, this is Marathon Oil, MRO. And it is one of the smaller integrateds, but quite good. And unfortunately, it's really beyond where you could buy it at this point. But it's looking very, very good. The last buy point here was this consolidation back about 38 days ago. That was at 1759. It's pulled back a little bit. It's above the buy point right now. It's above the pivot. So, this is the one you have to be a little bit careful buying this here. Right now, the stock is extended. But if you're in the stock, it's great. It's just not a good time to be buying the stock. For the first time. So, here's what I would say. For right now, I just think you've got to be more careful, more careful than you normally would on it, because you're going to be you don't want to, in this kind of market, you want to be super careful about buying extended. So let's see if we can put that up there. Yeah, so so buying extended in this market is it's not a good thing. So the stock is extended. Be not a good buy point now, but wait for a buy point. So wait and watch list. So a lot of people don't like the I'm being very cautious in this overall market because it's so volatile. I mean that we are in a confirmed uptrend, but just barely. So this is a very good stock. I wouldn't sell it if I owned it, but I also wouldn't be buying it. We're extended. We're above the pivot. The pivot on this one. Let's see if we can get that up for everybody. The pivot on this one, basically, it's on a consolidation basis. We're 22% above the pivot. You remember, you want to buy only up to about 5% above the pivot, and the reason is, especially in a market like this, because in a market like this, we can get these wicked pullbacks, and when we get these pullbacks, sometimes it is a real bear because it'll pull down. You've bought the right stock. You just wouldn't have bought it at the right level. And so right now, if you're not in the stock, it's looking very good, but I wouldn't buy it at this level. We're too far away from the pivot. I think we have to wait for it to we have to watch it until we have another base. But if you're in it, I wouldn't sell it, obviously. But not a good entry point for the stock. Great stock, but it's the right stock. It's the wrong time to buy it. This is a very interesting question on Bros. This is a stock that I haven't bought yet, and I'm really interested in this. I know that people love these coffee shops. Unfortunately, we don't have them here in Texas, but I know that they have a great potential. I've heard really good things about these coffee shops. I mean, people say that this is the next Starbucks. I don't know if that's true, but I do like the looks of this. I do like the looks of the stock. So basically, what I did here is I have this reversal line. I'm putting that in. This is the reversal line. We've moved above the reversal line, and we've got a 96 relative strength. I'm liking that. We're above the 50-day line. This is starting to line up correctly. I don't know if you can see this. It's kind of hard to see this, but this is getting correct. I'm going to move to the technicals here just to show you on this chart. We're above the 10-day, we're above the 21-day, and we're above the 50-day. That is the lineup you want. That means it's starting to make a move higher, and it's still not up to the original buy point, which was $62. But it's starting to make a move. So I think if you were adventuresome, I'm not in this one. This has a good checklist. I think you could start accumulating a position here. Now, is it guaranteed? Absolutely not. But this is the kind of action that you want to see on this kind of stock. Let's see if there's any earnings risks on that. I always look to see right in this kind of market if we're going to have some earnings risk. It does look like we are coming. Earnings are coming up they're on the 9th. So there is a fair amount of earnings risk on this one. You don't want to buy too close to earnings. And the reason is in a volatile market, you can get whipsawed. That's kind of what happened with Amazon and with a lot of the other stocks. So here's the thing. I like Bros. I like Dutch Brothers. I like the setup. One thing that I'm a little bit leery on, we're very close to earnings. The earnings are basically on the 9th. So here's what I would do with this one. I would wait for earnings, and then I'd possibly buy this after earnings. This could be a gap up. I doubt it will be a gap up, but I would wait for earnings and then buy after earnings because this is looking very, very good. This is a good chart. And so for Bros, wait for the earnings on and earnings for Bros is on 2/9, then possibly buy. So I would wait on this one until after those two after those 2.9 earnings, and then possibly buy it. It's a good stock. It's set up well. Getting a drink of soda there, kind of thirsty. But it's a good looking stock. I wouldn't buy it until after 2.9. So you basically you don't want to buy this into earnings, but after earnings, if this has a good earnings report, this might be a very good bet. The last 3 earnings reports all have been very good. Up 900%, up 100%, up 75%. So, the earnings are definitely looking good for growth, but I wouldn't buy it into earnings. You take along a little bit too much risk when you buy it before earnings. So I'd wait for earnings on this one and then possibly buy it. Let's take a look. Hey, Jim, do you have a Discord for regular trading? Well, we do. We do have that, and you can take a look at that. It wasn't that active today because we were just sitting and waiting and trying to come up with stuff. Normally we have a lot more trading going on, but it's a tough market to trade. So we do have a Discord out there, and if you want to sign up for it, it is a fee, but you can try it for 1 month. If it works for you, then keep on going. It's at www.Dallas Trading Floor, or if you're looking on TikTok, just go to my go to my profile, click on that, and you'll see the button for it. You can read more about it. Thank you very much for asking. So appreciate it. All right. Your prediction was right for Apple and Tesla splits. What do you think about Google? Absolutely the same plan. Thank you for watching. I really appreciate that you watching. See, here's the thing about splits on very big stocks like this. They tend to trade in a very specific way. And this is one of the reasons why I spend so much time talking about splits, because there's nothing guaranteed in the stock market. But I tell you what, splits are as close to a guarantee as you're going to get. Based on what I know, Google is going to trade up. And remember, on July 1st, that is the date of record. So everybody that has Google shares or GOG, that's the C shares, GOGL, those shares, they're going to split 20 for 1. So for every 1 share that you have, you're going to end up with 20 shares. Now, why is that important? Well, Apple has approximately 16 billion shares outstanding. And when Apple split last year, it split 4 for 1. When Apple split, there were approximately 4 billion shares outstanding. So now there's about 16 billion shares outstanding. Right now for Google, GOGL, there are they're a little bit less than they're a little bit less than there's about 978 million, I think. Don't quote me on this. I have to look it up. Shares outstanding. When this is split 20 for 1, there's going to be about 12 billion shares outstanding. So I expect if it splits around the $3,000 to $3,200 range, we're going to see the split shares trading at about 175, and that's kind of where you want them to be. So I do believe we're going to get a very nice, we're going to get a bump, and it's going to be a good profit-making opportunity. I'm trying to come together with some iron condors on this that I want to get out to everybody. But yes, we're going to have some great. There's going to be some. No matter what the market does, I think we're going to see an increase in the value of in the value of Google. I mean, I really believe it. A lot of I got a lot of PayPal, but not sure when to sell it. Okay, boy. If you watch me for a while, you know that I was short PayPal into earnings, and right after earnings, I did hold it through earnings, the bear put spread, and we did very well on it because the stock went down. Now, here's the problem with PayPal, and this is basically show you kind of the chart here. This is where I entered the trade, the 165, 145. March 18th, bear put spread. Now, I did close it early for a profit. I did close it early for a profit. If you're down more than 7% on this one, I really recommend shutting your position, and then we're going to find you a way to make some money back, because I think that for a while this is going to base. It's not that PayPal's going out of business. It's just that it's going to adjust probably, and it can adjust for up to a year. So never let a stock move against you more than about 7%. You always want to, and this can be extremely painful. Believe me, I had Matson lines today, and I had to, it sold because I had a stop loss on it. Now I had a very tight stop loss on it, but I was kind of disappointed on that, because I think, and then right after that it came back up. But don't let your losses grow. This is the main thing. Please don't let your losses grow. Take a hit now, and then let's find you something that can make you some money. Cash is a legitimate hedge. Now, they won't tell you that. None of the brokers will tell you that, but cash is a legitimate hedge. So stop the bleeding, and I would definitely, close the position. Absolutely. Look at that. Peloton. It's up 22% in after hours. That is so interesting. I had a bear trade on Peloton, and we did close it for a profit. Let's look at it, because this is why this market is so hard to trade. Peloton, which is sort of a junk company in my opinion, goes up in after hours. That's just incredible. Let's look at the daily chart. Yeah, look at that. It's up 30%. Okay, what is this? Well, let me tell you what this is. This is a for Peloton here, and this is one thing you got to look at. This is a short squeeze. Okay, this is a classic short squeeze. By the way, we're on, and this is interesting. We are the reason that this squeezing is. Remember, this is a Friday. This is an expiration of an options day. Thank you. So this is definitely a short squeeze. So that's what's going on here. I think, can't tell 100%, but the short squeeze on Peloton. That's what I think is happening. And that's just kind of that kind of thing. That's why I think it shot up so much. That's why I think it shot up so much in the after hours, because it is a short squeeze. It is a short squeeze, and so that happens. Once the short squeeze is done with, it's probably going to go down after that, and that is painful. But sometimes that's how it comes out. All right. Thank you very much for following the host. Okay, Tesla and Baba. Let's look at Alibaba first. This, of course, is a Chinese stock, if everybody knows that. I'm Captain Obvious here. I know that everyone knows that, but I just wanted to repeat that. And so there is some political risk with this one. Let's take a look at the, at sort of the, with Alibaba here, and see if we can kind of take a look. We're in a downward trend. We're below that 200-day line. That's just not a place you want to buy it. That's the 200-day right there at 172. It's up a little bit in after hours, just a tad. It does appear that this is getting ready to move lower. This is potentially a very good short. I mean, I don't always say that, but we've rallied up to the 50-day line. You can see it's crossed below that 50-day line. There was a drop. It then counted and rallied once, twice, and if it rallies 3 times, that may be a good place to potentially short it. Let's take a look at the weekly chart. Yeah, that's looking shortable. As you can see, I have a short. I put in here. This is where I shorted prior, but it's looking like we might be able to short it here again. So I'm going to put this on my short list. I do think that Alibaba is shortable. And the question is, it's getting set up. You always want to try to short it as it's coming back up, struggling up to a line. So BABA is potentially on the short list. I actually have a short list. It's sort of the bear hunt for the short list. But yeah, I don't think I think that Baba I hope you're not in the stock long. This is one you want to short. And I think we're coming up on a time when we could do it. Let's see if we're through earnings. On the technicals, we're below the 40-week line. We're looking at the weekly charts here, so it's a little bit different. The last time we had a base pattern was way back here. It's 55% below that. So yeah, it's just very wounded stock. I would be, looking possibly to potentially short this. This is one of the ones that I want to maintain on the short list because I think this is potentially shortable. Absolutely. Okay, great. Thank you for asking about AMD and NVIDIA. Let's look at NVIDIA first. Now I have a bull spread on this one, so hopefully NVIDIA is going the right way. Yes, it went up a lot today. Well, no, this is the weekly one. I do have a bull trade on this one, and it's a little bit off. Yeah, it's okay. Yeah, there we go. Okay, so it was up significantly, almost 2%, right at this reversal line. Yeah, you can see there, entered March 4th, 240, 250, bull put spread. That's right here, and we've moved up a little bit since there. So I think I do have the direction right on this one. I do think that we're going to move. We're just getting to the point where we're moving above a reversal line. If they can hold on to this, this is a pretty weak rally for a stock that's this good. But I do think it's going up. Now, I will close this spread if I don't get the right result in 10 more days because its earnings are in 12 days. So I will be closing this if I am not up on this thing. If I'm not up on this spread before earnings, I will close this early just because of this. But it looks fairly good going into earnings. Let's look at the technicals here. Always like to look at the technicals. And we are above the 200-day line, which is good. We're below the 50. We're below the 21-day. I think it's going to rally to the 21-day, and we're above the 10-day. So it's just starting its turn here. You can tell that by the way this stacks up. If all systems are go, you're going to have the 200-day, the 50, the 21-day, and the 10 all stacked correctly. Currently, they're not. It's above the 200-day, but it's below the 50. So in the midterm, the stock is down. In the 21-day, it's down as well. But this is the key one. If you can move above this 21-day line, that shows that it's going to move to the upside. So we're right kind of at the cusp here of it moving higher. And it does look like it is making that move. I hope that making that move. If it doesn't make a strong enough move, I'll close it early. Because we're only 12 days in front of earnings. Earnings are expected, and I think earnings are going to be very good. But the thing is, just having good earnings in this kind of market is not good enough. You almost have to be perfect in this market, or you just absolutely get punished. The earnings are coming out on the 16th. So here's my advice: if you're trading, if you're trading. If you're trading NVIDIA, if you are not up 10%, buy by the 16th, by the 15th, you want to sell this one because this could take a dump. I mean, it's looking good. I mean, the last 1, 2, 3, 4, 5, 6, 7 quarters have all been up in terms of earnings per share. This is truly a long-term leader, but this is a volatile market. Now, we did come down. We were bounced off of the 200-day line. That's a good sign. As long as the market stays moving higher, we ought to be good on this one. Relative strength is 95. This is the reason I have a bull trade on it, because it is strong. 95%. That means the top 5% of all stocks. So I do like the stock a lot, but with this kind of market, unless we're really strong into earnings, we're going to have to close it early. So be careful with this one if you own it right now. Also with AMD, another stock that I really like, and of course AMD is Advanced Micro Devices. And it's similar in the pattern in that it bounced off that 200-day line looking at the weekly chart. The question is, if we're not in it, here's the thing. Here's the thing with this one. We bounced off this 200-day line. We're still below. We're still below the 50-day line. So it's starting to make its move. This is a reversal, and it definitely is kind of hanging out right at the 21-day line. So let's look at that. So we're just right at the 21-day line, basically. We're above the 10-day line. So this is going to need some time to catch up. So I would say that this is probably going to trade flat or down for a week. That's kind of what I'm looking at here. Who knows? But that's kind of what I'm seeing. So if you're in it, it's potentially. I wouldn't get out of it, but I don't know if I would. I might want to wait a little bit to see if this can move above this higher high. That's where I would buy it above 128 or so. It's 123. So that's kind of where I'd buy it. But strong, it's looking very good. I'm not in the stock right now, just because I wasn't able to get it at the right buy point. There seems to be some support right about here. So, at the 21-day line, if it moves above the 21-day line, I think that would be a good place to buy it. But it's in this market, it's just punishing people that are buying extended. And right now, it's not extended, but it's needing to reverse higher. So I would be watch listing AMD. I would buy NVIDIA, watch list AMD. That's kind of my on the technicals, but you never can tell totally. So that's kind of how I would what I would look for too. All right. Do you think Facebook is going to go to 260, 270 level and down from there? That's a good question. Meta, which I guess is what Facebook is now called, has it's been struggling. I mean, there's just no there's just no two ways about it. Meta has definitely been struggling. Look at how far that drop was on earnings. This is one of the reasons why I'm so adamant about selling. If you don't have a 10% cushion, selling before you go through earnings, because that was the result of earnings. Okay, right there. All this different. This is how it should have dropped. Just an incredible amount, as you can see. I mean, it dropped 50 points. It dropped 50 points. So So this is the reason why you want, if you're going into earnings, sell, wait for it to come through, and then buy it. The question is, where is it going to go from here? Is it going to go to 260, 270? It might, but right now it's very, very wounded. As you can see on the technicals, it's below everything. It's 30%, almost 30% below the 200-day line. It's below the 50-day. It's below the 21-day, and it's below the 10-day. So it's very wounded. This is a wounded stock. So I wouldn't be buying this one, especially right now. I mean, yes, in the long term we're all dead, but I wouldn't buy this one. I wouldn't buy this one. Don't go bargain hunting on this one. This had some very key indicators here. As you can see, this is the death cross. This is where the 50-day moved below the 200-day. That's when you see this. Now we're looking at it in hindsight, but you can see this one was weak and it was below the reversal line. This is the the trending was down and it came right up to the. This is really interesting. It came right up all the way up to the 50-day line, and then earnings, boom, it just went down like a stone. So always be looking for that. Try to make sure that you're not in a downward trend and you're not trending below that 200-day line. That's just, if I could give you any advice, that's a good piece of advice there. All right, let's look at we did a little bit of Peloton. Let's look at ENPH and see if we can find something there. ENPH, and move over here to, there we go. And this is In-Phase Energy. And let's see if we can see. This unfortunately is not. This is home energy solutions for the photovoltaic industry. 196 out of 197. So there's only one category that's worse than this one right now. This is absolutely in the worst part of the market. Unfortunately, this is at the bottom. 99% of the market is doing better than this one. Its earnings are in 4 days. I just hope that you haven't lost money on this one, because this one is just incredibly weak. It just right now, this is just not what you want to be. So you really have to consider, if you're down more than 7% on this one, please sell it, because this has all the telltale signs. As you can see, that what I was talking about again, this is the death cross. And what this is that the 50 days moved below the 200-day. You can see that it precedes it about a month. So anytime you see this, you just kind of want to get out of the water, because there's sharks in the water. You just don't want to be in it. If you see that, that's the 50-day and across below the 200-day. That shows weakness, and we definitely have seen weakness. It's now rallied to the 21-day, and this could be a short as well. I mean, this one could be a short. So let me put this down. ENPH. Let's kind of evaluate this for a short, because this is a very weak stock. Okay. And it's fallen below that. There's a topping. This is this is left shoulder. Okay, it's probably going to come up and make a right shoulder here. This is the top. This is a shorting pattern. Okay. It's made a left shoulder. It's come up and made a head, and it looks as if, and we're looking on the weekly chart here, it looks as if there may be another shoulder that's made here. If there's another shoulder that's made here and that falls below that, that's a good place to short it. Earnings are in 4 days, so I wouldn't touch this thing. It's in 4 days, but this is setting up as a potential short. So I have to be kind of clear on that. So possible short, wait for earnings. So that's kind of how I would look at it. This is a possible short. It's in a very, very weak category. Again, it's not doing well, and it's a relatively high price stock. It's 142. Here's what I want to look at. I kind of want to look at what the ownership situation is in the stock to see, because let's go over here to the weekly chart to see if we can find something more about that. Let's take a look and see. Okay, so in terms of the ownership of this, just looking here to see stocks in the industry. Okay, in sector, I want to look at the ownership. If I can move it over. So let's see if I can see the ownership here. I'm looking. Yeah, there we go. Okay, there are about 30% funds in here. There's quite a few funds in here. Okay, here's probably what's going to happen here. This is very interesting because it does look like we have a lot of funds in this. Look at that, Fidelity Counter funds in it. We have 1,629 funds are in here. These are going to have, with this kind of a chart, these people are going to have to get out. And so there's going to be a lot of downward pressure on the stock. ENPH. This is potentially shortable because we have a lot of funds in it. We have heavy fund ownership. It looks as if I can't see that, about over 50%, I guess, of this is owned. Let's see what kind of funds are in it. This is going to tell us, because these funds are going to have to get out. And when they do, the selling is going to be intense. Most of these are A-plus funds. This is really interesting, mid-cap growth. So yeah, this is definitely a potential short. This is a potential short because all of these people, and these are a lot of funds in here, all of these people, they're going to have to get out of this if this continues to move down. And I do believe it looking like it is, because oil has been the sector that's been strong. Energy, solar, 196 out of 197. This is not a good sector of the economy, of the stock market. It's the worst sector. I'm looking at basically what we're doing is we're looking at the we're looking at the entire yeah, there we go. So look at this. We just have very bad stock. We have lots of funds in here, weak stock, definite chart that's looking like a potential short. So be careful with this one. This one looks like it might be a short. So I'm going to put that on my shorting list and take a look at it. All right. So rumor. Oh, this is interesting. Rumor that Amazon may. Okay, this sounds, Roman. This sounds like wishful thinking on the people that are trying to get out of Peloton, because there's a lot of people that are in Peloton, big funds that are in Peloton, and it is shortable. So they're going to float these rumors in CNBC and places like that. I believe. I mean, I have no inside information here, but this is kind of what they do when they have to get out of the burning house. Peloton is a burning house, and we did the bear put spread on. We did very well on the bear put spread. Let's see if we can go back and show you kind of where we shorted it. Did I have it in here? Because I had one on this. Let's see if I could make that work. Hold on one sec. Oh, okay. So, all right. So, anyways, so yeah, we did have a short on this one. But there's a lot of funds in this one, and that would make sense that Peloton would float that kind of thing. I doubt that Amazon will buy them because they don't have to. They can sell their products anyway. So I'd be kind of I could be wrong on this, but I think that's suspect in my mind. Jay, hey, thanks. Walmart. Let's look at Walmart. WMT. And you would think that this one was doing well, but I think that the retail numbers are going to be weak. Let's take a look at Walmart. It's taking a second for it to come up. There we go. Very flat, but very good stock. Just kind of keeps trucking along. Not really a great investing stock, but it's volatile in the consolidation, but it's below the 200-day line, so I wouldn't be interested in this one right now. Relative strength is 50, right in the middle of the market. Earnings are in 13 days, so I would avoid this one right now. I would basically avoid it until it can get above the 200-day moving average. So that's my point. So WMT, wait for it to move above the 200-day moving average. I think you really just have to wait on this one and just wait for it to move above that 200-day moving average, because that's where you're going to get, enough strength. Right now, I would not be a buyer of Walmart. Just again, not a lot of good setups right now. Tough market to trade. Not a lot of good setups. Now, one of the good setups that Rick is bringing up. Thank you very much for this, Rick. The XLE is the way to play the oils, I think, especially the E&Ps, because there's like 68. There's like 68 oil and gas companies, and they're all in different phases. Now, I did buy Matador today, but probably this is a better play on the market with the Energy Select Spider. And these operate a little bit differently than these spiders operate a little bit differently than the individual stocks, because it's a basket of stocks. And this has had a beautiful run. And look at this compared to the NASDAQ. I have the little NASDAQ line here, and you can see it is moving faster up than the NASDAQ. Also, this sector, the E&P sector, it's the number 2 sector. Now, it doesn't show it here because it shows this as an ETF, but it represents the energy sector here. So this Energy Select Spider, this is the energy sector, and it is weighted to the values of the stock here. So this is a great thing to get into right now. I think we're going to have higher oil prices. We're going to have inflation, and if you had to pick any one thing to be in long right now, I think it could do a lot worse than the XLE. So I think you're in a good stead. I think you're good here, Rick. I think you're good. I think this is a this is this is good. This is very, very good. So like what I'm seeing. Okay, we're almost finished here. We're going to take a look at Tesla. That'll probably be the last symbol today. Because it's important. As you know, I'm a Tesla bull. I'm not in it right now. It's stopped out. Tesla is right now in a basing period, so it's difficult. It's not as much of a time to buy it right now. As you can see, this is the trend line. Everything is coming in a little bit bandwidth issue, a little bit bandwidth challenged here at the house. We had snow here in Dallas. It's all melting now, but it's very exciting. It happens about every 3 years here in Dallas. So, we're still below that reversal line. It's trying to make a stand here. I really, I want to see if Tesla can move above 980. That's where I was stopped out the last time. I was stopped out right at 980. So if you can move above that and hold it, that's where you want to buy it. But right now, it's in what they call basing period, and that's where it's setting up, for this next run higher. I'm not discounting Tesla at all. We came down and we came down and we touched the 200-day moving average. It bounced off of that very nicely, and I do think it's making its move up here again. But I want to see it move above about there. That's where I have my alert. My alert is right at 980. So this is where it moves to the uptrend. When it moves above 980, I don't want to buy it below that, just because it has not reversed higher. But I'm still very, very bullish on. I'm very, very bullish on Tesla, and basically that's the long and short of it. Okay, so let's review kind of the ones that we had with Alibaba. That's setting up as a potential short. Also, ENPH, that's In-Phase Energy, that might be a short as well. The longs, you want to be like XLE. That's a great long right now. That's an ETF. Most of the strength in this market right now is in the oil sector. Google is set up very well, and I'm going to show everybody how I'm going to be trading it. I do have some shares, not as many as I'd like. I'll be honest with you. I think in the next 4 or 5 months, you're going to see a tremendous move on Google that will trade against the market, because this 20-for-1 split is going to be significant. We aren't going to see a lot out of it, so you want to get ready for that. And we want to try to buy. We want to try to buy Google if we possibly can. Do you like Microsoft this year over Amazon? Actually, I like Microsoft over Amazon. You read my mind. The problem with Amazon, I do like Amazon, but Amazon has been basing for 2 years. It's been in a base pattern for 2 years and hasn't moved out of that. That's when we like to buy as cancel investors. We like to buy as things are moving out of their base patterns. That's the reason why. That's the reason why it was so significant with GOOGL. That's Alphabet. The reason it's so significant is because, as you can see, and this is, let's see if put it back to the weekly chart. There we go. It's pushing out of this consolidation. And this is a base pattern. So if we go to the daily chart, I think you can see this here. Hopefully you can. It has moved above this little dotted line here. This is the consolidation. If it can move above this, now it moved above there. It peaked its head and then it pulled back. But it looks like with these earnings, it's going to move above that line. If it can move above that line, that means it's moved out of the base, and into another upward leg. And the reason I think this probably will happen is because with a 22-for-1 split, companies just don't split 20-for-1 unless they know something that we retail investors don't know. You just don't do that. It's too dangerous. When Apple split 4-for-1 last year, and when Tesla split 10-for-1 last year on the 31st of August, that's where it began. It's one of its biggest moves. I do think that that's probably going to happen after July 1st with I know this is a bold prediction, but after July 5th, we're probably going to see a tremendous move on Google once it splits. But we also have an opportunity, because the way splits typically will trade is that after the announcement, you're going to see an appreciation of the shares into the date of record. The date of record is July 1st. So the ideal thing is to buy now and then wait until a day before July 1st. That would be August 31st. You see how this is similar? Apple did it on the same day. Tesla did it on the same day last year. Google is going to do it on the same day. So you want to be seller on the 31st, typically of the 31st of August. So now is a good time to start accumulating Google, GOG, and hold it until the 31st. And why the day before the split? Well, there's just a lot of reasons for it, and I'm going to go into it. I'm going to make some videos on this, but trust me on this one. And I know it's hard to trust anybody on Google or any of these platforms, but typically a stock will appreciate most when it's in a split, when it's the announcement of the split, up until the date of record. And the date of record for the Google split is July 1st. So I have flapped my gums here quite a bit. I'd just like to invite you to get on the action trade alerts. Very, very easy to do. All you have to do, let's see, I think I have one more question from Short Dash Thoughts. So so that's kind of my take on Google. Google is going to offer us a great opportunity for profits this next year. So I want to be clear on that. Also, if you get on the action trade alerts, super easy to do. Just go to www.Dallas Trading Floor and sign up first and last name, and we put out stuff there. Also, if you want to be in our special Discord room, the link is available at Dallas Trading Floor as well. So until Monday, everybody, stay safe, stay happy, and we're going to make some money this year, even though the market is trading kind of screwy. One more thing I want to ask everybody out there, and I know everybody does this, but it really, for me, it's a big deal, and that is, if you could like us, that would be really great. It really helps us get out to more people, and so I really would appreciate if you do that. Please like it, and we will be. We'll be back on Monday at 4:00. Thanks, everybody. Happy trading. You have a good weekend, and stay warm.